everyone. Good morning, everybody. Welcome to Phoenix Trading Strategies Trading Room, where strategic knowledge and information allows you to trade successfully. Today is March 18th, 2016. It is 9:03 a.m. Eastern Time. For those of you here for the first time, welcome, and for those of you that are back, welcome back. So let's go to the disclaimer. Disclaimer: future stocks and spot currency trading have large potential rewards, but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in future stocks and forex markets. Don't trade with money you can't afford to lose. This website or presentation is neither a solicitation or an offer to buy, sell futures, stocks, or forex. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this website or presentation. Past performance indicators or methodology are not necessarily indicative of future results. So let us go to the calendar and see what they have for us this Friday. All right, so we've already had German PPI, producer price index numbers. It came in less than expected. Bank of England quarterly bulletin, nothing. Core CPI came in as expected for Canada. Core retail sales for Canada came in better than expected. CPI numbers came in slightly less than expected. And Canadian retail sales came in better than expected for the month. FOMC member Dudley should be speaking right now, saying things that he shouldn't. And then we look forward to consumer sentiment and inflation expectations within the hour. This will move the market. So this is definitely something that they're going to set up for. So we're going to look for a trade opportunity based on that. So right now, let's take our time and analyze this as it comes in. As you all know, it's always very, very interesting. The Dow, of course, made a move during the European session between 1 a.m. Pacific, which is what it reads on my charts, from 17,373 to 438, which is not a bad move, but not a great one. Let's see what the S&P looks like right now. And actually, I want to look at on the 7-minute. On the 7-minute, they have been giving much more clear signals than usual. So we're definitely going to take a look at it. Let's take a look at the Russell. Russell looks more or less the same. Russell actually has a signal to go long, where the Dow does not, or actually the Dow does, but with the Dow, we'd expect it to come down before going up. I don't see the Dow going down today. Let's take a look at crude. Crude's always an interesting one. Crude's already making a move to the upside even further. My only concern is that it already made quite a significant move from 39.90 to 41.20. That's not a bad move. You're talking about a 30-cent move. I still think it's got room to go. If I'm right, they're definitely going to press it and take it to 41.50 on the WTI. Let's take a look at DAX. The DAX should give us some insight. See, this thing went flat. Now, the fact that they did not break above this tells me that they're going to come down. Now, if I'm right, I don't know yet, because this will depend on what what the U.S. indexes do. So this one was really not even a good trade last night. It was one of those where you're like, really? I don't really like the way this thing traded. It was off from every level. Let's take a look at gold real quickly. Gold made a nice move to the downside. As you can see, they were not as forgiving, and they came right back down to 1248 from 1268, a nice $20 move. Now we do have a PowerPoint right here, a power dot right here, telling us that it'll probably go short even further. This was a pretty aggressive move, and this is an aggressive move as is right now. So the fact of the matter that it's challenging it again is not a good sign, because it means that they're going to attempt to break it. Why? Because this really isn't a Um, to me, this is not a resistance level. It's more of a mid-range level. Now, if I'm right, from the looks of it, this thing will come up, and if it comes up, you're probably looking at a $5 move, more to the upside. I actually like this trade more than I do the others. I would actually take a position on this one, but I want to scan the others first before I come back to this. So let's continue. Let's take a look at silver real quickly. Silver. See, silver actually looks better because at least they're using the trend stop to make the move up. They bounced off of it, and this is the second time around, and second time is usually the best one. I like silver long, actually, from this point. And your stop loss on this would be really no more than you're looking at 15,980. It's trading at 16,005. I say you could do 15,990. 15 cents, which isn't bad. That would be your stop loss. So you wouldn't be exposing too much. The problem with silver is that when it moves, it moves. See how it came down? So yeah, I'd say 59.80 and you're in good shape as a stop loss. You don't need to expose more than that. I don't see it coming down. I actually see it going up. But that would be my my stop loss there. Now, if that is correct, and see, here's the thing: I have not seen gold and silver move in the same direction, or gold, silver, the and the what do you call it? The indexes, U.S. stock indexes, move in the same direction forever. Very concerning as to how and why that's happening. So, because of that, it's somewhat, um, how can I say that, confusing because you can't really use them against each other to forecast one direction of one to the other. It's not working. They're uncorrelated. They're correlated right now, where before they were uncorrelated. So eventually they'll break that correlation. Until that happens, I think we're pretty much sitting ducks. See, this one here is already came and challenged, and looks like it's going to pull back, and it may pull back, but I doubt it. I still like gold to the upside because of the way that they're challenging it. Plus the fact that they've come down. They didn't hit the support level, but they came down literally $1 from it. And to me, that's very significant. But they will come and test it, though. That is for sure. I believe that they are going to come down and test it slightly, but that it'll eventually break above it. I don't expect this to come down too much. I think if anything, they'll set it up for consumer sentiment. Then at that point, we should have a trade in play. But at this point, I don't expect if this comes down, it'll come down here to 52.70, maybe come down $1. I'd say that would be the worst case scenario in that regard. I don't see it coming down to 12.51 at all. I still like it long from where it's currently trading. I just think that it's going to take some time for it to pop, but they're going to break through those power dots right here. And once they go, they're going to go. See, look at slight retracement and then went up. See, I can, if it comes down to 1254 even, or 1253.80. Yeah, 1253.80. I could see myself getting in. I don't see that it's going to go down any further from that. They're definitely going to hold. but it's a little too premature right now to jump on this one. See, it's at 1254. For me, it doesn't go below this level. 1253.90, 1253.80, and that's where it'll hold. And see, 1253.90. See, I could feel comfortable taking a position here at 1253.80, as I don't see it going below that. My risk here, in this case, would be 1252.60. So we're talking about $1.10 move, which is hardly nothing as a stop loss. And that stop loss there would be more or less acceptable. I just don't see it coming all the way down. Even if it did, I could withstand a $2 move before it went right back up. So let's take a look at the currencies and see what the currencies have for us, because those are always interesting. Euro. See, this one already went long, and they're setting up to go long from here. But at any moment, they could come down short. This one's not quite ready yet, but it's getting there. Let's take a look at the pound dollar. We may find better. No, this one already moved. This one is a little late in. We would be late getting in on it. 144.20. About the US yen. Yeah, see, this one is not. It already broke through these power dots here. So it's still getting ready to go long. Still an interesting play. It is definitely not over. So we'll have to wait on this one. I think it'll come down here, 111.45, before it bounces. Give me 1 minute, I'll be right back. Okay. Yeah, see, this one still looks like it's going to move up. Not much, but it's going to move. It's still setting up for it. It's not quite there yet. Let's take a look at the CAD. Ooh, this one just began. Now, even though we're slightly late on this one, this tells me that crude is going to go down. So, if that is the case, I don't see they've already broken these two pivots. Even though we're late in the entry, this thing still has momentum to the upside. And it could come all the way up to 32 to 130.29. That's still a good trade in my mind. Now here's a problem. Now, by getting into this trade, see, it's already popped. Your stop loss would be here at 129.63. We're talking 15, 20 pips. I think you can do it. Put a stop loss here at 129.71. Now, if this thing breaks above these pivots here, you see these pivots here, and these pivots here, and this one here. If it breaks, which is right there actually, if it breaks above 129.82, then at that point we should see it most definitely come up to 129.95. That's 15 pips, and then definitely come up to 130.02. It's not a bad trade. We're talking 20 pips there. Your risk is about 9 pips. 129.71 is where I would be comfortable putting a stop loss on this one. That means crude comes down. It does not necessarily mean that the index has come down. That just means that crude will rebalance. And if that is the case, then we should see crude come. Let's take a look at crude real quickly. Oh yeah, see, it already made that move. Conniving. They are treacherous. That was too quick. Came down a few cents. Not too bad, but enough to make a statement. That's for sure. That makes this a little interesting because anytime that they've already began a bullish run and they do a pullback like this, that means that if it sustains itself above this level, it'll maintain and it will continue to come down. That makes this trade a little dangerous. And that means that I'd rather stay out of it right now and stay in it because from the looks of it, this was the pullback they were looking for to go short. That to me is a little deceiving, but sometimes, see, look at that. They're pulling back. They were setting people up to go long, and that's fine. You know, I'm the first one to get out of a trade that doesn't work, and that means that they didn't break these pivots. If they don't, they're not going to break these pivots, and they're coming down. I feel comfortable taking this trade to the downside based on what they just did right now, because that means that they're trying to eliminate retail traders from going short any further, and so they're pulling stops. So that means it's got to come down. That's fine. I'll recover the 3 pips or 2 pips that I was down, and it should come down like a stone from that point. Let's confirm. Let's add the rest of the indicators. Let's add the volume and the price identifier so we can have better confirmation. Give it a minute. Give it a minute. It's the volume indicator. Come on, come on, come on. Wherever you are, come on, come on. That's the only issue that I have with Ninja right now. Is that based on the amount of tick data that my software is using, it takes up quite a bit of time. Give it a minute. We're almost there, guys. Okay, here we go. So let's take a look at this. Here's where the volume kicks in. See, they pulled back and they came down. And they pulled back again, came down. And this is the final pullback, and that's coming down. So, how would you read this is the question. This thing's coming down, no question about it. They're in deep trouble on this Forex trade. So basically, here's your volume divergence. And see, our volume indicator works like volume better than a volume profile indicator, because not only does it give you the direction, but you can also see the volume as it's coming in. So right now we have 58 million on the buy, 66 million on the sell, difference of 9.6 million now. And you see how it came down pretty drastically. We're 10 pips into this now. We're almost 10 pips, and we have a power dot. See, that's what I was waiting for. I was waiting for them to make a stupid mistake. This is the mistake I was waiting for them to make, because they were going to set this up prior to the open or right before it. And we have a power dot and a pivot. So at this point, even though this one came down pretty aggressively, it's still settled below these previous two and this one here. That being said and done, this candle right here in this bar, if the volume is negative and settles negative, then it means that this one will come down. If it comes down, I need it to break 129.58. Why? Or in this case, most definitely break 129.63. There's a pivot right here. Now, they pretty much stopped right above it. But if it breaks down to it or below it, then this trade will continue. And if it continues, it will definitely come right back down to 129.31. And that's not a bad trade from 129.74. That's a pretty decent trade on the FX side. Now, it could be better, because anytime that they do a pullback like this, it will go twice the amount of pips. So that means that if it comes down, we're probably looking at, instead of a 30 pip trade, we're probably looking at a 70 pip, 60, 50, definitely 50 pips are in play here. That is without say. but this will give us an idea more or less of what to gauge. That's why I have 100 days. Damn it. I only need 20 right now. I'm not doing anything else, so this is right before the open. Let me correct that real quickly so that we have the ability to move faster. Well, I got stuffed out of my silver trade. But I'm still in gold. So this one should come down, no sweat. It's pretty much in the bag. And then crude is going to make a move to the upside, or it already has. If it hasn't, it will. Give it a minute. We're almost there. Yeah, see, oof, and we have a power dot. We're actually in time to go long on crude right now. Shit. Can't take it. I'm already in. This one's going long. Yeah. This one's going long. I would tell you if you're going to get in it, you have volume divergence already in play. See, look at that. It doesn't get any better than this. Far from it. It is so clear, it's not even funny. This is where they outplay themselves. This is where they do the momentum shift. First they pulled up, then they came down, and now, of course, this is to the upside, and this will rally. Now, if this rally right back up to 41.30, 13 or 41.20, that Canadian trade is going to be excellent. And I mean excellent. So, to me, it looks like they're definitely going to break above this pivot 40.85. Once they break above, they're on their way to the top. The U.S. CAD trade is already in play to the downside, and looks like we'll pick up 50 pips on that. The Dow opened positively. It's up 40, 45, 46 points right now. So let's give it a minute. We're almost there. Yeah, see, that US CAD trade definitely looks good to the downside. No questions asked. We have a power dot at the top, and they're breaking right below 129.63, where that pivot is. See that pivot right there? Once they break below that, it's on. Then they have to come down from there to 129.54. And they should come all the way down to 129.30 from that point. So I'm not too concerned about this little retracement. They're going to hold. The fact that we have the first power dot here means that they're just going to retest. But I don't think that they're going to come right back up. It doesn't seem to be the case, not with the Dow rallying the way it is. Gold is making a move right back up. Yeah, this is just a small retracement. I'm not too concerned about it. And see, this would be the last momentum shift. Why? Because this is where they did this one, and this would be the last one. And what that means is that they're giving us a new re-entry. We'll see what happens here. It should come up slightly, but then they should pull back. So long as it doesn't break above this pivot, we're good. This pivot is significant, but down here you see the volume indicator. See what they did? They pulled up, and they did it a little bit too aggressively. The point of control for the sellers is here, and the buyers is down here at the bottom of this candle. Not a good sign. So long as they keep themselves under here, we're good. And I think that they will. Now, if that is the case, yeah, see that once it begins, that means you have a better entry than the one that I did. And that means that you could actually go short from this position and know that your stop loss would definitely not be more than, I mean, let's just say that I would add a position to the short here. I would feel comfortable putting 2 standard lots here. You have your second power dot. And even though they've used the trend dots, the trend dots as support levels, this pivot changes the game right here and the formation of power dots. And that means it's got to come down. And gold, of course, is going to make that move up again for the same reason, which is unclear to me why it is moving in correlation with the US stock indexes. See, we're almost at break even on this right now. This is actually the trade of the morning. Be careful. Now, if this one's coming down, that means that, and you can see, this is very important. So long, it doesn't matter to me that it settles with bullish volume. What matters to me is that this candle actually settles bearish, and the negative volume will come in. See how they have more bullish volume, but as negative volume comes in, they're moving the price action down. That to me is significant. You got 87 million on the buy, 56 million on the sell, difference of 32 million bullish volume. Now what that means is that that additional volume are orders that are not getting filled to the upside. See, look at that. 95 million on the buy, 63 million on the sell. It just takes a slight amount of negative volume to bring this thing down. And it may settle with bullish volume. I have, I can't tell you otherwise. The only thing is that if it breaks below 129.64, 129.63 in this candle, if it comes all the way down, then they're in deep trouble, because that means that we're looking at this to come right back down to 129.30 and probably go below. That's why I told you I felt comfortable adding a second position, because they came to retest. And on the retest, they failed miserably. So it's a failed momentum shift to the downside on the volume. That's why this indicator works better than a volume profile, because the volume profile indicator, and let me show you, because this trade is actually pretty good. We're going to stay in this trade. We only got 2 trades, gold and this one. And gold, we're down 9 cents right now, which is nothing after being down 25 cents. So let's go here, volume up and down, and volume profile. Let me show you why those indicators don't work. There's nothing more exciting than showing other technology that's old, outdated, and doesn't work. when ours works very well. But it'll give you an understanding of why they're using it and why they allow platform providers to include it in their suite of indicators. All right, so let's take a look at this. This one's interesting. Okay, so here's the volume profile right now. This is the candle. See how it's coming in? You couldn't tell what the hell they were doing here. I mean, it doesn't matter. You know, this doesn't mean anything to me, that it's coming in negative, when our indicator is telling us right here that it has bullish volume. Who's right and who's wrong? I can assure you that they are mistaken from every level. Because if I go off of their indicator, I would be making a huge mistake by saying this is bearish, because this came in bullish right here, not bearish, and they're going to break through that level. See here how the volume profile is coming in now at this level, at this price level. That doesn't mean anything. That doesn't mean it's going to go short. That's the problem. So when you look at it from that perspective, it's deceiving, because, you know, as it's at a certain price level, then you're seeing it, you know, be more negative. Well, that doesn't mean anything to me. If I'm not seeing volume divergence the way that we saw it here, then this has no meaning. You know, now look at that. We're up, let me see, from 129.76 to 129.65. We're already up 11, 12 pips on this trade. And it's going to continue because, like I said, if it breaks below this one, I'm looking for 129.63. That is the break point. The minute it breaks below that, they're in deep, deep, deep trouble. I mean, there is no other word to say it that way. So, and once that happens, it comes down aggressively, because this pivot's the only thing holding it. And we know that once it breaks below, it comes down all the way down to 129.36, potentially 129.30. Now, even if it came down to 129.36 or 37, that's still a great trade. That's still a good trade. So does the volume profile actually guide you? No, it doesn't do a damn thing for me, especially when I know that this one had bullish volume. Now, the fact that they broke below this level right here tells me that they're going to continue. If it would not have broken below the trend dot, because this trend dot formed here, right inside here. So the fact that it broke, that tells me this one's coming down. No question about it. And you got negative volume coming in. You got 42 million, 44 million on the buy, 52 million on the sell, 53, 54, 56. See, this volume indicator here forms after the candle closes. Ours is giving you information as the candle is continuing to form and as the tick data is coming in. The volume profile indicator isn't telling me a damn thing, because it's here, and this little line right here isn't telling me anything. Oh, suddenly it increased. Whoopee. That increase is not caused by volume. There is hardly no volume in this candle right now. So this indicator is completely deceptive, and anyone that uses it is, you know, also being deceived by it because they want to believe something that isn't there. Now, this was telling you go long. Look at this. That's another thing. You know, if this indicator is telling you to go long, but ours is telling you do not fall into that trap, because the trade and the volume divergences to the downside stay short. What the hell am I using this indicator for? I'd get slaughtered, killed, beaten, served, and domesticated in one trade. I don't know about you, but I can't afford that. I can't afford misinformation. It doesn't work for me. So now, where we're at, like I said, to me, 129.63 is good, but the fact that you see how this settled negatively now? See how it's way below this one? Not even way below, but it is, you know, telling us that there is more negative volume than bullish volume. And you could see the volume at the top as it's coming in. 98 million on the buy, 116 on the sell, difference of 18 million, 17 million negative, 120 on the negative, 121. And they're right there on the edge of that 129.63 because they know that the minute they break below that thing, it is over. And here it comes. So not only did they come up and give us a re-entry on this trade to add another position to come down, but they were short from here. This candle is where they gave the short signal. It's right here. The volume divergence was to the downside and continues to be. Not like this indicator which was telling you go long. I would never go long based on this indicator. And I would never, ever, see, look at this. This is at 12,963. So that means that this is this line right here. This isn't doing anything for me. The volume profile is not doing anything at all. It's this one right here, 129.62. Now it's this one, and it's hardly moving. Yet, on the volume here, we have 121 on the buy, 171 on the sell. That's a strong fight right there. And we also have power dots that have formed. So they came here, tested it, failed, came back down, retested it, failed, came back down, and this is the one that we're looking for to the downside. But here it's telling you that there's hardly any volume. I'm seeing in this candle a tremendous amount of volume. I don't care where it's distributed. You got 130, 133, 134 million on the buy, 185 million on the sell. A difference of 50 million negative in this candle. Does this reflect it? Does this indicator reflect it? No. Does this reflect it? No, it does not. This one isn't even plotting it. That's the worst part. And as for our gold trade, let me show you the way. See, gold's right back up. I'm only 3 ticks away from breaking even. And it's going to rally. And once it breaks, it's going to break very, very aggressively. Then they come down and retest, yes, and they use the trend stop to do so. But at the end of the day, they were still going to go long. And this proved it because they came down here, 3 candles, see, with point of control in each candle announcing long because it was in the middle or above 50% of the candle. And then this one came in, proved it, came up. Then this one came down, this one settled and opened above this one and above 50% of this candle. That makes this candle a valid candle to the upside. I actually like this trade long. It allows, if you were trading gold, it even allows you to take a second position. But there's no need because at the end of the day, it's still going to move. But as for our other trade, not a big trade right now. Doesn't have to be, but it's very consistent in the direction that it's going. I would rather have consistency in the direction that it's going than second guessing myself. And I don't have to second guess myself with the US CAD. Give it a second. There it is. See, they broke below 129.63. Now it's on. And this settled, look at this thing. This thing settled bullish when it had negative volume. Can I, in good mind, continue to use, look at this. This had 177 on the buy, 222 million on the sell. This candle, so our volume bar is correct. This is bullish. Are you kidding me? Talk about misinformation. So the question is, can you continue to use misinformation? I'd say no. I like the odds with my indicators more than with the current status quo. Is volume profile doing anything for us at all? The answer is no. Look at this. It's trading at 129.63 right here. This is the volume profile. It's saying negative, but doesn't mean anything to me. See, look, now it's trading at 129.55. Is this reflecting anything? No. It doesn't reflect anything. Anything at all. Now I'm expecting this to come down to 129.50, no questions. So that's another 10 pips to the downside. So from 129.76, we're talking about 26 pips to the downside. That's not a bad trade. That's a decent trade in the morning. It's not an extravagant one, but if you got 2 standard lots on it, let me tell you something. Right now, you could walk away and still have a smile on your face. But if you wait and you hold on, you'll have a bigger smile on your face. Again, what is deceiving about the volume right now? Our volume indicator is telling us that it has more bullish volume. 71 on the buy, 54 on the sell, but 55 on the sell, 55 million. Every time that they have slightly bearish volume come in, they push down. So we know that staying to the upside is not the real trade, because eventually it's going to come down. See? Now the question is, can I rely on this indicator? No, I cannot. There is a question. Have 10 pip trailing stop working. Nice. You see, we were going to find a trade to make money today. So here you can see here at the bottom right here to the right, see the volume? You can see the bullish volume, 94 million on the buy. You can see the bearish volume right here, 74 million on the sell. You got 25 million bullish volume, but this is a bearish candle. Now, that's the second time they do this. Except this one had bearish volume, but originally had bullish volume. Then this one, they pushed it, and finally the bears came in and took control. Now, as they take control of this, it's still a bearish candle. For me, it would be better if it settles with negative volume. If the sellers actually come in and take control with the volume, then for me, I'm more satisfied with that at that point. You sure that's what you need every day? So at this point right now, we're up 15, 16 pips. I'm still looking for my 25. I know it's going to give it. It's just a matter of time. But I can still walk away from this trade. No questions asked. Volume-wise, look at 120 on the buy, 122 on the buy, 124 on the buy, 90 on the sell. 125 to 127 million, 129 million on the buy. It barely moved a pip. Barely. Now look as the negative volume comes in. 92 on the sell, 93, and see, Price action moves down 97, and it's 98, and it's moving down. It moved down 3 pips with very little bearish volume. 100 million on the net, on 101 on the sell, 132 on the buy. It's still holding. So long as it stays below 129.63, I have no issues. It may have bullish volume, but at the end of the day, it's still bearish. $103, 104 on the sell, and look, it just needed 1 million on the negative for it to come down. Didn't need more than that. And they know that once they break that 129.58, it's bye-bye Charlie. They're holding it. They're holding it, but at the end of the day, it's got to come down. $129.57. New candle. Now again, it didn't do the deed up here. This was bullish. This was supposed to go long. It didn't. Now you have the conventional volume indicator telling you that there is less volume coming into the trade. Well, hell, I see a whole lot of it. Such is the case that in about 3 pips, I'm going to be up 26 pips on this trade. So can I rely on the conventional indicators? The answer is no. I cannot. These conventional indicators don't work. The volume profile didn't do a damn thing for me. See, look at this. When it was up here at 129.58, this is how much it showed. It didn't tell me that they were going to break and go below. The volume profile indicator didn't do anything for me except be misleading. Why? Because all the negative volume was up here at 129.59, 129.60. But what about down here? This candle and this candle have just as much volume as this one. Actually, this one has more volume. But this information still matters to me, and I'm not getting the right information. Far from it, the volume profile is telling me that I should have gotten out as it diminished. The minute it started to diminish from here, this told me get out, not stay in, because it's been diminishing. Yet ours is still, we still have at this point volume divergence to the downside right now. Why? Let me explain. You got 44 on the buy, 42 on the sell, difference of 3.4.6 million, 5.5 million, 47 on the buy, 42 on the sell, 49, 50 against 42, 51, so 53. See, with all that bullish volume that came in, don't you agree that this thing should have popped to the upside? We're still at 42 million. 60 million on the buy. You got 19 million bullish volume, 20 million, 61 million. And that candle hasn't moved at all beyond 129.60. Okay, now 129.62. Let's see, as the bearish volume comes in, you got 45 million coming in, 46 million, 69 on the 70 on the buy, 48 million on the sell. Now remember that 129.63 is a very, very key price level for us on that trade. 52 million, we're right back to 129.61. Negative 53 million. right back down to 129.58, negative 57 million. You got more bullish volume in this candle. Is the volume profile doing anything for us? No, nothing. You got 70 million on the buy, 59 on the sell, 60 on the negative, 61. Let's see if it goes below 129.57. Oh, it's right there. It's right on the edge. $75 million on the buy, 62 on the sell. 78, 63 on the sell. $71 million. And we just dropped 72 million. We just dropped 2 pips. 73 million on the negative, 81, 82 on the buy, 73, 75 on the sell, 76 on the sell. Before they were, the buyers were coming in, they had 20 million in bullish volume. Now they barely have 4.3, 3.1. Look at that, the sellers are coming in 86 million versus 90 on the buy, 88 million, 89, 92. Come on, break below that 129.50. There it is. There it is. You got 96 on the buy, 99 on the sell. They're fighting for it right here. This is where trading becomes emotional and interesting, because when you start to see this, and you start to see the reaction of price action against the volume that's coming in, it sort of changes everything. Okay, so it's consumer sentiment. Michigan preliminary March consumer sentiment at 90 versus 91.70. So not good for the U.S. This was a head fake of the worst kind. Is it too late? Yeah, it's too late to re-enter. Yeah, most definitely too late to re-enter. Actually now, based on what they're doing, see, that number wasn't good. That was negative. This thing should come down. You got 180 to 149 on the buy, 148 on the sell. 1.1 million, no, less than that. It was slightly bullish, but not enough. And you see, you still have volume divergence. This settled up here, this settled right smack in the middle of that zero line. From this point, because it came above 129.63, I don't really feel comfortable with this anymore, even though they're using the trend dots as resistance levels. So if this thing comes down from it, then it should come right back down to 129.30. And here it comes. $129.57. See, the minute it goes below 129.55, they're done. Very little volume for them to come down. 32, 33 on the buy, 36, 38 on the sell. Look at that. That's when you know. When there's very little volume, that means that they finished rebalancing their risk to the upside, which is what they did here. And now it's time to pay the piper. And guess who's the piper? It's you and it's me on this trade. No greed. Once you're out of a trade, don't go back in. because sometimes it'll come back to haunt you and you don't want to be put in that position. So it's at 129.56, 129.55. Now again, let's look at this. Did the volume profile do anything for us? No, didn't do anything at all. Doesn't mean anything. Did this do anything for us? No, not really. Did this indicator do anything for us? Significantly. Tremendously. This indicator is worth these two and more, because these two indicators are irrelevant. They just don't work. They're deceiving and they're late. Give it a minute. You thought it went back down because you got out. It's the Richard indicator. We've been, every time that we get into the CAD, sometimes we get out prematurely and then it pops 30 pips more in our favor. And I know that it hadn't popped, but I know that it's going to. That's why I'm still in it, because I know that it's going to give that and more. And when it comes down, it's going to be pretty nasty and pretty aggressive. I'm waiting for it to come down to 129.50, because right now it's currently trading. See, this should have broken below this price level already, because there's nothing holding it back. From this pivot, it should come down to 129.32 easily. There's nothing holding it from coming down. That 129.55 has been like a thorn in a heel. And look, all the time, we had power dots telling us, do not go long, go short. And we got in on this candle. This is where we got in at. Come on, go below that 129.55. Put a smile on everyone's face today. Sometimes you don't need to look for multiple trades, guys. You just need to find one. And if that one gives you the immediate setup, look at it from this perspective. I have one client that taught me a lesson. He goes in for 15 to 20 pips. We've met that right now. He finds these trades, and when he finds them, he goes in with 5 standard lots. So every time that he goes into a trade, he's looking to make between $800 to $1,000 in less than an hour. Do you know how many of these trades he finds a day? Minimum 2. He looks for 3, but he nails 2. He may not get the third one. So every day he's banking $1,600 to almost $2,000 a day. This man taught me a lesson. I saw him take a $5,000 account to $50,000 in 2 months. All it took him was 2 months. And every day he would just go looking specifically for that. Well, imagine if you go in and you're looking for 25 to 50 pips. 25 pips are doable every day. But if you know that you're going to hit and nail that direction, is there anything else that you need to be concerned with? The answer is no, there isn't. See, now we're up 26 pips. 27. Let's see if it goes down below that. I think it's going to go down. Oh no, these jerks, they're going to use a trend stop right here. Oh, that hurts. See how they came in right here? See how the trend stop slowly came in and that is now flatlining? See, I don't feel comfortable with this anymore. As much as I would like it to come down, and you see how this one settled up, I mean, it could come down slightly more, but if it doesn't break below 129.50, in this case, I'd need it to break below 129.47. And if it doesn't do that, then I got nothing else to talk about with this trade. So we'll see. And the volume as it's coming in right now is 23 on the buy, 14 on the sell. Now, 29 on the buy, 18 on the sell, 19 on the sell, 20 on the sell, 30 on the buy, 21 on the sell. But see, it's starting to move up. It has to break below 129.50. Then at that point, we got something to talk about. But right now, we don't. And I don't like the way this candle settled. So this thing has to come in aggressive, because this candle, the point of control in the volume bar, has to be lower than this one. So it's got to come in even more negative. It's got to settle more negative than 30 million on the negative. And if it does that, then at that point, we know that we can continue on the trade. If not, we're done. Because the minute this trade goes short, you got 7 candles. 1, 2, 3, 4, 5, 6, 7. That's it. This is done. Even if it came down any further, you know, I really don't see the need to put myself in any more danger, if you want to call it that. You know, I would say it would come down further. It's got one more leg to come down to, but I just don't see it right now. I mean, I'd love for this to come down another 10 pips. Make no mistake about it. It would make everyone's morning. But the question at hand is, when is it enough? When you know that they've finished the cycle of a trade, when is it enough? When do you say, I can walk away from this trade? And when you answer that question, then guess what? Not only do you develop good money management skills, but more importantly is that you win. And you win every time. Now it's having a really hard time going below that. Really, really hard time. It has negative volume, because it does. Look, 68 on the buy, 79 on the sell, difference of 7.2. But the bulls are coming in and they're holding it. You know, to me, that's a no-no. But they've been notorious to play this game around these price levels, and then they pop. And when they pop down like 20, 30 pips. That's the only thing holding me in on this trade. But at this point, let's just say that greed is not good. And if you see that it's not going to go, take the money. Take the money and run. Because you're not going to get another shot at it. See, it's having a really hard time breaking below that price level. 129.50, 129.49 is just, you know, they're holding it. They are holding it. And the fact that it's not breaking below is really bothering me. I'd rather take that trade off the table. So we made 27 pips on a trade. That's not bad. It's not bad at all. And we're still in gold. Gold, we're only down 9 ticks right now. Silver, I was stopped out with $125 loss, but this one still has my attention to the upside. Why? Because you got volume divergence right here. And because they've used trend stop 3 times already, same level to move up. And they've been challenging this level pretty aggressively. So that means that when they pop, they're going to jump to 157 very aggressively. So I'm not going to change this trade at all, but I'm going to go look for something else. Now the market analyzer is telling us, go look at the Aussie yen, or even the euro for that matter. And I like the euro. The euro's been pretty active. Give it a minute. See? This one, you have volume divergence to the upside. You had it here, and you have it here. And right now, see how they bounced from here, and then they came up? This trade is to the upside, and this euro trade's going to pop. I like this trade going long. I don't like it going short, and I feel easily a good 10 pips in hand, most definitely 15 for sure to the upside. Are there any pivots holding this trade down right now? This one here, 112.92. But I think that once they break above it, it's on. And then, of course, they'll come up to 113.15, no questions asked. I'd like to say there's a good 30 pip, 40 pip trade in this one. The volume divergence is to the upside. It's right here. This is the momentum shift in volume that everyone is looking to identify. Why? See how they came down aggressively, and then this one is an inside bar, but it pulled back up, and you see it? It also settled slightly higher, and then this one came in and they pushed it. Doesn't necessarily mean that they pushed it to come down. No. It means they pushed it to hold. And this candle, of course, will continue that trend to the upside. It's just a matter of time. Any questions? No questions? Really? Wow. Okay. Don't say I didn't ask. Yeah, see the volume here is very, when you're in a trade like this, you need to look at the volume. See how it's coming in. You got 31 on the buy, 25 on the sell. In terms of now 33 on the buy, 34, 30. And see how the buyer's volume came in and the candle moved up. That tells you that it is directional. That price action is directional with the bullish volume that's coming in. 36 on the buy, 30 on the sell. So long as this candle settles up with bullish volume, that's all that matters. Everything else matters not. give it a minute. Watch this trade. I'll be right back. Okay, let's take a good hard look at this one. Yeah, I like this trade to the upside. See how the volume's coming in? As the buyers come in, they move it right back up. It's just a matter of time. Just a matter of time before they pop. And when they pop, it's going to be really, really interesting. Now, there is no more news at this point. You know, consumer sentiment came in. Inflation expectations are not. That's bad. This is a bad number. Really bad. But they may be waiting for these idiots to speak from the Fed. Rosengren and Bullard. Within the half hour, this guy's going to come out and speak, and it's not going to mean anything because he's got nothing to say at this point. Nothing important. It's not going to change the direction of these trades. These trades are in play right now. It's just a matter of time. Time is basically what we are waiting for. And once they go, they'll go. This is going to, see, here's what I like about this trade. You see the trend dots, how they were coming up. And then they came down, then they came up, then this one pushed right above it. This candle changed the direction of the trend by breaking the trend dots. And the fact that the trend stop flatlined and now moved up, to me, very significant. Also because when these power dots formed here, they were supporting this level. What do you see here? Pivots, very strong pivot points right here. So this is, to me, a good position to be in. So at this point, it's pretty much a waiting game. Not much that we can do. The Dow is up practically 100 points right now on the cash market. And the US dollar has been literally taking a hit these past few days. We're finally about to be positive in gold. We're down 2 ticks, which is nothing. It's moving in the same direction as the euro, more or less. Not bad, Rich. Very nice. So now, it's a waiting game. The question is, do you have the tolerance to wait? And as for gold, where it's currently at, because it's going to go back up, even though we're down 9 ticks, which is nothing. I'd like to tell you that you potentially have a better entry than I do if you were going to trade gold, because you still got volume divergence to the upside. This is just a minor setback, and see, so long as they stay above these pivots here, 122, 52, 60, so long as they stay there. If they come down, they come down to 150, 130. But so long as they stay right there, right where they're at, right there, then we're good. And that's a pretty drastic. And see, they're using the trend stop. See how it's flatlined right here? Every time that they've come down, you've had volume divergence to the upside. So the momentum shift is still long, even though they're playing this retracement. This retracement is just a minor setback. It's not that much, it's not that big of a deal. Because at any moment, they'll change. And you see how they're, settling slightly below, but still higher than this. That tells me that they're going to play it up again. And it's just a matter of time. Because when they play it up, it's going to be quick. It's going to be fast. Because otherwise, this thing should have come down right now based on how the Dow is trading. And since they've been more or less trading in the same direction, I'm actually shocked that this one hasn't popped yet. But I'm not too shocked, actually. Because like I said, it's just a matter of time. See, it's setting up for it. It's getting ready to pop. So I'm content with this trade. I'm not concerned about it because it's going to go right back up. And if this candle settles higher than these candles, that means that you have higher lows as well, which to me, see, there it goes. They're real conniving. I mean, real deceptive. But see, if we didn't have this indicator telling us that, we would never see the trade. That's why I tell you, it's important to look at the volume to see how it's coming in. Now, they have more negative volume on this thing. Make no question about it. But even though they have negative volume, as the buyer's volume comes in, how does price action react to it is the question. That's where you have to basically look at every visual. Plus the fact that you still have volume divergence to the upside. It's not to the downside. So this trade's more, we're just going to have to hold and sit on it for a while, but it'll come back up. Not too concerned about that. As for the euro, we just hit positive numbers right now in the euro. Someone raised their hand. Tony G. Imagine that you cannot get your message across to me. Give it a minute. There. See? Now the euro's in play. Right to the upside. And what did they use? They used the trend dots as support levels. And the fact that they used them right above these power dot levels here means this trade is on. Again, we have volume divergence leading us, telling us that this is the way. Now, here's the beautiful thing about this. When you have volume divergence in the same direction as price action, that trade is worth 2. Why? Because you have twice as much accuracy in that direction. When they're going in the same direction, that's the trade you want. That's the trade that's worthwhile. Now, I'm not looking for a big trade on this. I'm really looking for 15, 20 pips on this. That is all that I'm looking for. Let me see if there's any pivots right here. Deceptive son of a gun. That's where it's holding. It's having a bit of an issue breaking 112.92. But once it breaks 112.92, pop goes the weasel to 130, 113.02. But we still have a bullish trend. And in this case, you got 1, 2, 3, 4, 5. I'd like to say we have 2 more candles to the upside. And then we'd have to reevaluate to see if it's going to continue or not, or if it's going to retrace and then continue. Question? Can't hear me? Really? My volume is good. Quick sound check. Can everyone else hear me? Simple Y, yes will do. Oh, okay, now you can. Interesting. Don't know what it is, but we're positive in the trade now. 3 to 4 pips. Now it's just a matter of waiting, letting them play the trade. So, Ted, ready to take that leap of faith? It broke through that pivot, remember, at 112.92. Now, The move is on. Has to go to 113.02, and if it breaks above that, nothing holding it from going to 113.15. And what would that signify to us? That would signify a 25 pip move again. The market's not giving a lot, guys. So you got to take advantage of when it's there to take it. But if you find two trades like this, you're looking at 40 to 50 pips a day minimum. These trades come out. And if you're doing 40 to 50 pips a day, I mean, you're done. You won. Think about it. The only thing left for you to do is to maintain certain consistency, but more importantly is that it's not just about the consistency at that level, it's about the fact that you have figured this out and now you can slowly add more positions to your trade because now you know when it's going to pop. And when it's going to pop, that puts you in a better position. So if you would have taken the US CAD trade in this one right now, you'd be up 470 for the day. You would have had two positions on the CAD and one position on this one. I mean, seriously, tell me where else you get this type of education. You missed the entry on the thing that you're getting coffee. I know that happens to me too. I hate when that happens. This is going to be one of those trades that's going to take its sweet time, guys. It's not going to be in a hurry. It's just going to be there. And when it does, you'll see it slowly but surely moving. Next candle. Let's see what this one does. Now, this one's already trading above, the previous two candles. So it's got nowhere else to go but up. I like the way it started and where it opened at. It means it's a continuation candle. It means it should continue to the upside. Again, volume divergence. Still up. So what more can I show you than this? I mean, these are the secrets to the kingdom, guys. We are basically decoding and breaking down the bank's super algorithms and giving them a kick in the rear, showing that they are not that good and that we're better. And right now you'd be up 12 pips on this trade if you took it. 11. Tell me where else you can get into a trade in a matter of a half hour, make 200 bucks like that, and be done with your day. I haven't found anything. And once it breaks that 1302, it's on. There it is. See? Look at that. What a beauty. They didn't even ask permission. They just uppercut. Now that miserable gold trade hasn't really done much for me. I'm barely up 2 ticks. 6 ticks. Wow. 7. It finally popped. 4, 6, but it took this long. Conniving dogs. 7, let's see if it gives me 10. This one's moving up really nicely. I like that. Like I said, for me, 113.15 is doable. But this one, the gold, is done. I can live with 2 ticks on that trade. The only position that we have is the euro, and we're up 16 pips on this one. And it's going to give us the 20 that I asked for. Yes. Rick Geppetto told me that April 1st, so in a week, they're ready to go. $16 pips. Now they're having a really hard time breaking this level for some stupid reason. Why is that? Because there's a pivot right here. They broke through it. There's nothing holding them here. This thing should come up here to 113.15. No questions asked. Another 10 pips to the upside. And I'm trying to find a reason why they are stalling. These conniving mongrels. There's no pivots here. Well, there's power dots here, but that's not a reason. That means they still have to come to 113.10, 113.15. Now, if they don't break above 113.10, you know what? I'm fine with that. You got 156 million on the buy, 99 on the sell, 100 million, 56 million bullish volume. Yeah, FXCM, they're special, I know. Come on, baby, make the move. Make the move. Put a smile on everyone's face today. It's not budging. Yeah, see, at this point, like I said, 15 pips looks real good to me. And if it's not going to give any more, hell, we already took 27 pips out of the other one. You know, you're talking about 50 pips. 50 pips, guys, in one day. I mean, do you really need to do any more damage? The answer is no. Don't let greed blind you. Greed can be destructive against your account. And when you learn to control that and take what's on the table, what you've already won, then at that point, that's when you become a trader. That's it. That's when all of this that we've learned makes sense and comes into play. That's where you don't have to prove anything anymore, because you won. You've broken down their algorithms. Well, Phoenix Trading Strategies did it for you. But you've learned how to use the strategy, how to use the indicator suite, and how to win. And the market wasn't giving much this morning, let's be honest. I mean, you know, it was a stubborn mule. You couldn't kick the damn thing to give us a trade. It just wasn't budging. I told you, 7 candles. The minute it went, 1, 2, 3, 4, 5, 6. You know, this is the 7th candle, but it's not going to go any higher. You know, they pulled back too aggressively. 5 pips to me, and they're trading right at this level. I'm not that interested in getting in. If I wasn't in the trade here or here, and we were in it right here, I got no interest any further at this point. I don't know yet. I'm waiting for this client to tell me if I'm going to go to Vegas or not. I will let you know probably Monday. I'd love to go to Vegas. Believe me, I want to get away from here. I need to get away from my family for a few days. So this is basically where we're at. This is how it's going to work. Any questions, guys? I mean, for those of you that have the software, this should begin to make sense. For those of you that don't have the software, this should make even more sense. But it'll make more sense once you have the software. So I'm going to do you a favor, and I'm going to write down my email in the chat. It is ricardo@phoenixtradingstrategies.com. My telephone number, for those of you that are brave enough to call me. I don't bite. I will answer your questions. 818-431-1357, and you can Skype me. No one needs to know my Skype except those of you that are here. So my email is ricardo@phoenixtradingstrategies.com, and my telephone number is 818-431-1357. And that's it, guys. US CAD going short. I'm going to take a look at it. All right, let's see it. I don't think it's going to go short too much. I will take a look. Oh, don't worry, Marco. We'll get to you on the weekend, Sunday. No, the US CAD is not going short anymore. It bounced. Told you it was going to bounce. Look at that. We took it from here all the way down here, and then it came right back up. 30 pips. Can't be wrong about that, but it's not going to go down. It's not going to go short anymore. So that's it, guys. I want to thank you very much for joining us today here at Phoenix Trading Strategies. For those of you that have the software, continue to practice. For those of you that don't, well, you need to send me an email so that you can get it. And there's a price for it, of course. We'll discuss terms. Have a great weekend. I look forward to seeing you Monday morning at, let's see, same time, 9 a.m. Eastern. Have a good one, Marshall. Take care. Bye-bye now. Have a great weekend. We'll post the video up and we'll send it out to everyone over the weekend, okay? Thank you. Have a great day. Bye-bye now.